Welcome back to Return My Capital. Today we're going to continue our ETF Review Series and dial in on SCHD, which is a really quality product from Charles Schwab. It's an ETF that has gotten a lot of attention over the last year or two, and as we go through this review, I think you'll understand why. SCHD just paid out dividends yesterday, the 27th of March, so I thought this would be a great time to take a look at it. We see shares currently trading for $71.25. Over the past year, we're down just about 10%-ish. If we look at the 5 years, up 45%, 10 years, up a whopping 125%. Take a look at the max chart here. ETF was started back in 2011, so not much difference from the 10-year chart, but all time, this ETF is up 175%. Trading, just under the halfway point of the 52-week range. And we see the expense ratio on SCHD, similar to Vanguard products, great low expense ratio, 0.06%. Quarterly dividend payer, as you would expect, with an annual dividend payment of $2.64, a 3.71% yield. So this ETF really is, and you'll see in the metrics here shortly, a great blend of high dividend yield as well as surprisingly good dividend growth. Assets under management, 45 billion, so definitely not a small ETF here. Just a quick look at the ratings, a mix of buy and hold. We'll get deeper into those in a moment. This ETF grades out with a B- on momentum, A+ on expenses, as we mentioned, the 0.06, A+ on dividends. We'll get more into that. B+ on risk, and an A+ in liquidity. Let's keep it going down here with some of the analyst ratings. Seeking Alpha, we've got 17 ratings, 10 of them buy, 6 hold, 1 sell. And there are no Wall Street ratings on this one, so definitely an overwhelmingly positive review from the 17 analysts with 10 buys, 6 holds. Moving along, we can take a look at returns over the 1, 3, 5, and 10-year durations. If we want to take a look at total returns, as we would want to with a dividend-focused product like this, total returns over the 1 year, down to 7% compared to the S&P 500, almost 11%. Take a look at 3-year returns. SCHD, 77% up. S&P 500, 64%. Very similar on the 5-year, 74 and 66. We want to bump this out to 10-year total returns for SCHD. We're looking at 205%, again, with dividends included, compared to 208% for the S&P 500. So darn near identical returns to the S&P 500 over the 10-year duration. Again, that is essentially the entire duration that SCHD has been available as a product. So very similar returns to the S&P 500 over that time frame, but certainly you would be getting a much greater percentage of that return in dividends paid if that is something that you're looking for out of your portfolio. If we take a look at holdings here, on a sector breakout anyway, industrials is in the lead with almost 18% in industrials, healthcare 16.5%, financials 14%, consumer defensive 13.5%, technology 12.5%, consumer cyclical just over 9%, energy 9%, communications almost 5%, materials 2%, and utilities just 0.25%. And that is something that people view very favorably about SCHD, is that there are rules in place with the construction of this ETF to enhance its diversity of sectors that are included into this ETF. Now, if we want to take a look at individual holdings of SCHD, the top 10 anyway, please note that just about a week ago, the companies were reshuffled with SCHD, where once a year, SCHD will remove some holdings from the portfolio and add others. And that is done not necessarily with human interaction, but it's done on a rules-based system for SCHD. There are 105 total holdings for this ETF. And interestingly enough, AbbVie, which was one of the recent ads a week ago, is now the top holding of SCHD. I thought that was interesting. So you've got AbbVie healthcare pharmaceutical giant, coming in at 4.3%. With Pepsi next, very similar weighting, followed by Cisco, Texas Instruments, Coca-Cola, UPS, Pfizer, Broadcom, Verizon, Amgen, rounding out the top 10. Now, the top 10 holdings do make up 41% of this ETF, so it is a top-heavy weighted fund ETF. But again, only 105 holdings total for this ETF, so it is a very concentrated ETF. They are, through their rules, looking to pick just a few winners as opposed to other ETFs that may be more broad. Looking more in depth here on the dividends, again, the yield is 3.71% with an annual payout of $2.64, that is. Now, you take a look at this 3.71% yield and you're in love with that if you're looking for a high yield to live off of or simply to reinvest. But then you take a look at this 5-year dividend growth rate, the CAGR, and you see it's at 15.5%. Now, if you were getting 15.5% dividend growth out of an ETF that was tailored for dividend growth, you would be extremely happy with that. But you take that in combination with its current yield of 3.71%, and that is a big reason why this ETF has gained such popularity. It's been growing dividends every year that it's been in service. The recent ex-dividend date was the 22nd of March, and like I said, it did just pay out on the 27th of March. Moving on to the dividend growth. Like we set up here, 15.5% 5-year dividend CAGR. And you see it here. Back in 2012, the annual dividend was 81 cents per share. Kick forward 10 years in 2022, that had grown to $2.56 per share. And it is, as you see, just a steady year-over-year increase. And that certainly points to why people, especially dividend-focused investors, have fallen in love with this ETF. If we want to take a look at some peers and compare SCHD, we've got VYM here and DGRO, two other ETFs that I'll be covering in future videos, very popular dividend-focused ETFs. VYM from Vanguard, DGRO from iShares. Expense ratios on all three, outstanding, 0.06, 0.08, 0.06. Very large AUMs on all of these, 20s, 30s, 40s, billions. Dividend yield on VYM is 3.22%, and that is Vanguard's high dividend yield ETF. But again, SCHD is well over that, about 0.5% more. DGRO is a dividend ETF focused on growth, so 2.5% current yield. Take a look at those 5-year CAGRs on the dividend. VYM 6.6%, DGRO 10.3%. So SCHD is offering a higher current yield than VYM, and it is offering greater 5-year dividend CAGR than DGRO, and beating that out by 5 or 6% on the growth. So yeah, that says a lot as to why this ETF has gained such popularity and such a following, not only from dividend investors, but investors as a whole. And again, looking at holdings, these were just updated a week ago as they did their annual rebalance. And so if you haven't been made aware of that, I believe I made a previous video on that rebalance, as I'm sure other content creators on YouTube have as well. So yeah, there have been significant changes recently with companies entering and exiting SCHD. So that about wraps it up. I just wanted to cover some wave tops here. Thanks for watching this review of the SCHD here. As I mentioned before, this is going to be a part of my ETF review series, and I do have a playlist on my channel dedicated to those ETF reviews in case you miss one, or even if you wanted to go back and review one of my reviews. There's a lot of content that is going to be added into this playlist this week and beyond, so stay tuned. This is the last week of this quarter, so some of those great ETFs are distributing dividend payments all at the same time. SCHD was the first one this week, but DGRO, VYM, which I mentioned, those are going on this week. IDV, VIG, VUG, VU, VTI, those are all happening this week. So I'll be producing reviews of those ETFs in the coming days, and there's going to be a lot of content coming your way in the near and long term. So if you enjoy this type of stuff or think you'd benefit from staying informed, please like and subscribe to return my capital. Thanks again for watching. Take care, and let's really enjoy these dividend payments this week.